Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for September the 7th, 2011. Now we're back after a holiday long weekend. We're finally finished with the summer trading. We're back into regular trade. So there's some good positions I think forming in the markets right now, but we are going to see some very choppy trade this week, and it's perfectly normal for the first week back after the summer holidays. So let's get started right away. Our first trade for tonight, we're looking at September orange juice futures. Now, looks like we have a good move forming here. Vantage Point calling or suggesting that the orange juice contracts are going to make a significant move higher. Now, what I'm looking at here is my favorite combination of the predicted true strength indicator in combination with the predicted MACD. We can see that they're both in heavily oversold territory and they have both crossed the trigger. Our predicted short, medium, and long-term differences again must be used when using the Vantage Point software because they're a very good indication of not only a directional indicator but also if something is trending overbought, oversold. So we can see here the predicted short and medium term differences have broke above the zero line, and the predicted long-term difference, this darker colored blue line, is getting ready to cross that trigger also. Now this setup is indicative of a trending move. Now we're still below the 18-day predicted moving average using our triple EMA cross setup. So what we want to do is identify where is the market closed. We've closed at 175.05. Key levels 172.11, 170.38, and 172.41. So we've closed above all three of the Vantage Point predicted moving averages. That looks very good. Now we want to go into our individual crossovers here also. Looking at, we can see here the short-term crossover has crossed about 4 days ago. It's continuing to move higher. Looking at the medium-term crossover from Vantage Point, again, this is a very powerful signal when this medium-term crossover in conjunction with the predicted MACD and the predicted TSI all cross the trigger at the same time. Now our long-term crossover is still a little mixed. We're going to see some volatility. That is very likely. Now looking at the charts, we can see this big sell-off from the 200 mark all the way down to just below the 160. But what I also want to point out here is we can see a very significant area of support forming off this 165 area. So stops would definitely be below this level. Now looking at going into the Vantage Point daily report to help us fine-tune this entry point, we can see we've had a series of significantly higher closes starting at 166.60, finishing today at 175.05. Very strong move. So just because we've had that strong move, does that mean that it's over? Well, no. I think that this move potentially is just getting warmed up. So looking at tomorrow, we have 173.52 as our low, 176.03 as our high. So we're going to use that as our pivot area. Again, in this particular case, even on an intraday basis, I would prefer to have my stops below this support level that we can see down here. That we've tried 2, 4, 6 times to break through this level, and it hasn't done it. Okay, so that is rather bullish. Now what I'm also going to do is bring in the Vantage Point predicted high and low for the day and put it right onto the chart to visually look at this and see how accurate it's been. We can see that we're staying within the Vantage Point predicted high and low, but we're not getting down to that predicted low. It's not tagging this black line, but it keeps poking above the red line, which is the predicted high. Now, if it goes higher on the day, that doesn't mean that Vantage Point is wrong. It just simply means that this trend is strengthening. Okay, so let's try and remember that. So, as we can see here, this trade has some not just good short-term potential, but it has some, in my opinion, some very good medium and longer-term potential here also, and a return back up over the 180, 190, 195 mark. That seems to be a reasonable a play at this particular time. So your intraday traders, they can get out, in the 176, 178 area, but your medium and longer term traders, I would be looking for the 180, 190 mark. So that's our first position for tonight. Now our second position for tonight is in the US-Japan currency pair. I've talked extensively about this in the Forex Weekly Outlook and the fact that I felt that the dollar was going to gain a significant amount of strength at market open today, which is pretty much exactly what happened. Now I see this continuing against not only the Swiss franc but against the Japanese yen. Now the reason I say that, because I'm sure everybody is aware of the intervention on the Swiss franc at the Swiss National Bank. I don't know if it'll work or not. It may or it may not, but at any rate, I believe Japan is going to, I think it's a monkey see, monkey do type of environment in there. And if the Bank of Japan can jump on this opportunity to also intervene with maybe a little bit of help from the other central banks, this is probably going to push the dollar yen out of this 70 range and push it back towards the 80-85 mark. And this could happen very, very quickly. So what we want to do here is identify, we can see, I've been telling this to my own clients, I put out a standing buy signal. I've had a standing buy signal to my own clients on dollar yen for probably the last 2 months. Anywhere above 76, we are buyers. Fundamentally, the yen, the Japan itself is in far worse shape than the US will ever be, in my opinion. So just adding that basic fundamental to some strong technicals, we should have a decent play here. Now we can see that we're the predicted MACD and the predicted TSI. Again, that combination that I like has shown itself literally weeks ago, and it's taken a very long time for this trade to progress. But now we can see finally the predicted short, medium, and long-term differences also breaking above that zero line. Looking at our crossovers, we can see our crossover is into the second day on the short-term crossover. So this is still a little shaky. I'm not going to deny that, but I think a bigger move is on its way. We can see that the medium-term crossover is just crossing that trigger now. So in my opinion, this represents some very good opportunity to get into this from potentially a much longer term perspective. We can see our long-term crossover has repeatedly tried to break the vantage. The blue line has tried to cross this black line on this long-term crossover since the beginning of July, and it hasn't been able to do it. It's finally broke above that. This clearly signals a breakout scenario to me. So looking at this trade, let's see what we've got here from the vantage point, predicted high and predicted low. We're going to get a little aggressive with our entry point here, just to clarify. We've got 77.37, 78.24. Now 77.37 is a rather aggressive entry, respecting that we've closed at 77.69. So let's come back here and look at that chart again. We know where the vantage point predicted low is. Now we're going to bring that triple EMA cross back up and bring this into play to identify the key support level. We can see that it's 77.03. So the way, and what I also want to point out is 77.28. These are the two key levels that I'm watching. So your aggressive traders, much like myself, 77.28, 77.30, that's the point you're going in. Your less aggressive traders can wait and see how things look if we come down into this 77.05, 77.03 area. My opinion is I think we're going to see a pretty aggressive move here on dollar yen either tonight or tomorrow. That is my view on that. So again, we have stops on this trade should be down below 76. My stops on all my stops on this trade that I've been doing for months have been in the 75.50 area. They have never been hit. Okay, so I just want to point that out. Now, again, as a disclaimer, not everybody can afford a 100 or 150 point stop loss, so you have to trade in relationship to your own account, of course. But we want to let this trade develop. If we're risking about 100, 150 pips on this particular trade, I would be looking for a retracement back towards this 81 level. So we would be looking at this trade potentially for somewhere between 300 and 400 pips in a more medium-term perspective. So keep that in mind. You're going with a bigger stop, but you're also going for a much bigger payday here. So with that said, those are the market positions for September the 7th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.